Hello and welcome to this week's weekly market update. My name is Alejandro Zambrano, and it was truly a remarkable and exciting week last week. I do think we can have more of the same, and I do also think that the next couple of weeks will be very interesting to trade, at least based on my experience of last time President Trump president got elected. So let's dig in. But before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk. We can make a lot of money, but we can also lose a lot of money if we don't manage our risk correctly. So please bear that in mind. As well, I'm going to share my views on the market, but this is not investment advice. It's not created for you specifically. See it more as educational and to support you in your trading. So there's a few things happened last week. You just take them in chronological order. It's always good to understand what happened last week to be able to understand what can happen this week. All right. So we have Australian Australian rate meeting. So the left rates at 4.35%. And the reason for that is because underlying inflation, that's core inflation, is at 3.5%, which is higher than their target of 2.5%. They don't like that. So, and they also don't think inflation is going to reach their target until mid 2026. So we're looking at 1.5 years from now. So normally they would have pushed up and kept interest rates high to really kill the inflation, but they're not doing it right now. They're rather keeping it like this because they don't want to hurt the economy too much. Now they're vigilant to upside risks to inflation, which means that they are ready to act if inflation indeed picks up. So that might still happen. Now, when we're trading the Australian dollar, we need to bear that in mind. So when you trade Aussie dollar yen, when you trade Aussie dollar versus the euro, for example, it's always good to bear that in mind, because if you look at something like the euro area, they're looking to cut rates, and they are in fact cutting rates, or maybe Aussie dollar Swiss franc, right? You get the idea. Now, we also had data from the US ISM services come in at 56 versus 53.4 anticipated, and higher than the 54.9 prior. Now, what is interesting here is that the US economy is doing much better than expected, all right? So people have been saying, oh, higher interest rates is going to kill the economy, and I was one of those. But it hasn't. You know, stock markets are up, rates are coming down, inflation is coming down. It's all looking almost too good to be true, right? And that is influencing the market. Now, we had the US election. Okay, was a very interesting election. Normally, if you trade like the non-farm payrolls or any other event, you get the data out, and then the market goes up, and then it goes down, gets you stopped out, and then it goes up again. And then you'd be like, oh, I should have kept the position. It wasn't like this time. We did a live coverage of the US election right here on this channel, and we actually had a very nice setup. It was Euro USD, it was actually sell, and the market dropped. It was about a risk to reward ratio of 4.5%. Now, of course, when we're taking those positions or those views, we do it with incomplete information. But if the risk to reward ratio makes sense, then we can still take it, because if we get hurt, we win a little, and if we win big. In my case, I bought cryptocurrencies, and really since last week, I made some serious money. And I'm not saying this to brag, I'm saying this so you're aware of it. Like, the easy times in the markets are right now. Okay, I've seen it before. Because President Trump hasn't officially been made president again, he's what we call president-elect. So from January 6th, he's going to be able to be in the White House and taking decisions. Okay, so now we have a bit of a honeymoon period where we have an idea what's going to happen, but we don't know exactly. And people like the idea. That's why stocks are up and crypto is up, and Euro USD is down. So we can trade on this, okay? But when he is then elected, it's going to become much more difficult. If you traded last time he was around, he was very active on Twitter. So oil prices were up. He would tweet, oh, oil prices are too up, I'm gonna make them go down. And you'd be stopped out. I was up oil nicely, and then a tweet comes out. He tries to push the market the way he wants. As well about the dollar was too strong. There's a lot of issues. So now until January 6th, I think is going to be a terrific time to trade. Now, let's go back here. So what happened? Dollar up, gold down, stocks up, and Bitcoin and crypto up. Why did this happen? Well, tax cuts. Less government, more money into citizens' pockets, less rules if you want to set up businesses, and there's going to be less rules around like climate and things like that. So that's going to make it easier to do business, it's going to be easier to make money. That's why stocks are up. But the unemployment rate is already down. It's at 4.1%. I think it was at 3.5 or something at one point, last year. It's not going to go much lower. Imagine a room with 100 people. There's only 4 people right now that is not working. That's not a lot. So yeah, you can push the economy up. But what's going to happen is that you have someone with a job and then a company that wants to invest. So they need to pay higher for another person that already has a job. So what's going to happen with wages? They're going to go up. What's going to happen with inflation? That's going to go up. The idea, though, why they're doing this is because they want all these long-term unemployed people that haven't worked for years, to take on jobs. The problem, though, is that where are the jobs right now? Artificial intelligence, maybe crypto. We're talking about highly sophisticated jobs. The easy jobs, assembling things. I'm not saying it's not easy, hard. I don't know nothing about that. I'm a computer guy. But I'm saying the industrial jobs that we used to have before in the Western world, I don't think they're going to come back. But this is what they're trying to do. They're trying to get those jobs back. The reason why they're not going to come back, because the same people that live in these countries, they don't want to pay a lot for it. We're used to getting a new computer, a new iPhone. Well, iPhones are expensive, but we like to have tech for low prices and things for low prices. So I'm not sure people care too much if your neighbor did it or somebody in the Far East did it, okay? But we'll see. Long story short, if they can get people that have been long-term unemployed or that need reskilling, yeah, that might boost GDP, that might keep inflation at bay. But realistically, it's not going to be like that. And that's why people think Euro USD can go down to 0.95 from today's 0.7-ish, okay? So we can go down quite a lot. And that's getting people really excited. I'm going to talk about the charts in a minute or two. Tariffs. There are 2 things that can hurt the thing then. Tariffs and mass deportation. Okay, so tariffs, yes, if they introduce tariffs, in other words, they say, well, you want to buy that nice, affordable car from Japan? Well, now you need to pay 10, 20% more. Okay, that might happen. And that means that the US citizen would now say, okay, if I have to pay 20% more, I might just buy an American car. So this means that the money is not leaving the country. So that boosts the dollar. That's good for the dollar. But the problem is that realistically, the Japanese are going to be like, all right, so you don't want to buy, you're going to put tariffs on our cars, then we're going to put tariffs on your steel or something else that they import from the US. So there's a lot of these retaliation tariffs. And they tried to do all of this 100 years ago, and it created a big issue in the world. Hopefully we're going to avoid that. Now, I think that's going to be delayed a bit. I think they will try to negotiate with everybody. They're going to try to speak first. Hey, can we do a deal that helps Japan and helps the US? Yes, let's do it. And they're going to do that with Japan, US, China, Mexico, Canada, European Union. And if they can get good deals, everybody wins. But if there is no good deals, potentially everybody can lose. So that's a problem. But I think tariffs are going to come later in the game. Call it 1 year later, in 2026, when they realize that people don't want to give good deals according to what the US government wants. Then we have mass deportations. So this is my theory, I'm just speculating. They might deport people that are committing crimes and things like that, if they can find them. This is not that easy. There are people living in the US that arrived there as children, like 20 years ago, that are working, they have houses and everything. And they they need to find these people, and we're talking about millions of people. So it's going to create social unrest, mass demonstrations and protests, problems like that. But I'm thinking like this. Realistically, if you want to keep people out, you probably would build the wall first. Try to fix the wall. So fixing a wall, that's going to take some time, okay? And that's probably going to take a year. So I think mass deportations might not happen until 2026. So those are the two things to watch. So, and that as well can hurt the US economy, because a lot of people that are not documented, they're doing the jobs that Native Americans don't want to do because they don't make enough money on that, and doesn't make sense for them, or they just don't want to do. They just don't want to pick fruit, for example. So with that in mind, these are the two big issues that he would like to implement that could create problems. Okay, now there's a few bits and pieces more, but I don't want to get too complicated. But these two things, keep an eye on that, because if news comes out that that's going to happen, it's going to happen quicker than expected, it would be fair to assume that stock markets are going to get very shaky at that point. Now, what else did we have? This. So we're going to have a Republican president, and most likely a Republican Congress and a Republican House and a Republican Senate. That means that when President Trump comes with an idea, the House and the Senate are probably going to say, okay, let's do it. The idea with this is that you have different sort of president, the House and the Senate, and they all need to agree, okay? That's how you don't get, because otherwise you will just end up with a king, right? Or a dictator. Now here, why is this important? Because they have control, so it's going to be easier to do most things. And with that in mind, the typical percentage return for the stock markets will be 12.9%. So that's like almost 13%. Now, if we think about what he wants to do, maybe it's going to be a bit higher, say 15%. So next year, 12 to 15% upside on the S&P 500. And the S&P 500 is around 6,000 right now. So maybe go to 6,000, I think 750, maybe 7,000 in total. So definitely to the upside. And we're seeing that stock indices as well is something that people are trading, and stocks as well. Let's focus on this. US jobless claims came in at low levels. Again, the US economy is doing much better than expected. So even if Trump didn't come in, pushback on interest rates looks very similar, very likely. Okay. Now the Fed. Somebody asked the head of the Fed, Jerome Powell, if he would resign if Trump asked him to resign, and he said no. And they asked him again. And then he said, I'm legally not obliged to resign. Well, according to the law, no, that's what he said. So I don't think he's going to leave. And he didn't like that question. And there's going to be an issue, a huge issue. And that is that the Fed has two mandates: keep unemployment rate low and keep inflation low. And that means that they're going to push up interest rates as the economy starts to boost and gain. And that's going to create serious political issues. And that's going to be interesting to see how that plays out. I think things are going to be good at the end of the day, but it will definitely slow growth if you have interest rates higher. But what does it mean for the Euro USD? Goes down. All right. What do we have this week? Nothing really interesting, but we have some UK data out on Tuesday if you want to trade the British pound. You also have US inflation on Wednesday. I think that's probably the most interesting data point for this week. And then you have Nvidia earnings. And then if you're trading Aussie dollar, you have unemployment figures. And then you have retail sales on Friday. So there's really nothing super interesting happening except inflation, which again is not really that exciting to what's going to happen in the future. So I think it's going to be a market where we're pretty much riding on what happened last week. So this is the Euro USD. This is a 3-day chart. And when I did this market update, I said below 108.30, we're going to probably go lower. And the reason for this is that we were stuck in this big wedge, and we breached it, and we closed closer to the lows here. And the pattern says we can go all the way down to 103. And this is the same levels we talked about last week. So this should not come as a surprise. I think if we have any corrections, people are going to sell. In general, I would look to sell for this to go to 103 in the short term. Here's the S&P 500. So the S&P 500, we're looking at this level last week, and we said we want to be bullish about this for this to go up. If this doesn't hold, we want to buy at lower levels. I said, independently on who wins, stock markets are probably going to gain in the future, because it doesn't matter if you go back to this slide. Well, actually, no, you can't see it here. But it doesn't matter who wins. The market always goes up. So we want it to be buyers. Now, if we look at this today, we're sort of around 6,000, as I said. I said we can go to 6,750 by the end of next year, maybe a bit higher, 7,000 or so. And I think if we dip here to maybe 5,900, I think people are going to be quite keen on buying. In general, we're looking to buy here. Now, this is the problem. We could be stuck in this mode, okay? Slow, slow, slow to the upside, and then slow, 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 and then a little bit of a sell-off. And I think we're going to be stuck in this. So there is an issue here. If you didn't take a position on the election here, you might be just too late. But I think you could potentially buy dips if you can. And unfortunately, there's nothing we can do about it, because if we don't buy the dips, the little dips, we might miss out on the whole move. But there will be both. So from a trading perspective, one can maybe trade these little moves to the upside and then just be ready that the market can go down a bit more. Here's the dollar Swiss franc. This is another way of trading FX. So the Swiss National Bank, they're cutting rates, and they're going to keep on cutting rates. And realistically, as long as we trade above 0.8614, we'll go down, and then probably going to go up again. And this is gold prices. Life is a bit difficult for gold prices right now. They did dive on the back of Euro USD trading lower. When we did the webinar, we said live coverage, we said a breach here can take you lower. That happened. I would remain bullish about 2,600, but I think we're literally going to trade sideways between these two levels. Sorry, I'll take that back. We're not going to be bullish. We're going to be bearish here and then see how far this goes. We are, of course, dealing with a very strong uptrend, so worried people are going to be quite keen on buying. But I think it could be very difficult going forward for gold. And then you have oil prices. There's not too much activity here. The trading thesis is not very strong either. I'm bearish below 76.10, and I think people selling between 74.51, targeting the downside. Now this is crypto. So last week we said trade bullish above this level, we can go up, and here was a good opportunity to buy on the news. It's all about risk reward ratio. I bought here, and I did buy here, by the way. I bought here, and I held it, and then I got out, and I got stopped out for a small gain. And then I literally went long again. As I saw the news coming out, I bought Bitcoin, and it was a risk. I don't have all the data, but it looked like Trump was going to win, and we know what Trump wants to do. And in fact, Kamala Harris as well was pro-crypto. So why not? Why not be bullish? And it made a lot of sense. And it went up, and I bought a ton of other stuff. And it's really been a good last couple of days. I think here it's a tricky situation, but because we pushed higher since I did this chart. But if we go down to 73, I think people are going to be buying, and it's a bit of a tricky situation. It's a bit like with stock indices. We might not have the biggest corrections, but I think any 5% correction, I think people are going to be buying it. So I would look to buy dips there as well. And there's a ton of other ones. Check out Binance Coin, BNB. We have that with Thinkmarkets. That's also looking very, very interesting. With that in mind, we're going to wrap things up. Let's just see if you guys have any questions. If not, we're going to wrap things up. We usually host this presentation, as you know, at this time of the day on every Monday. So if you did want to join, you're most welcome to join us. If not, you can just ask a question. Okay, let me see here. So we have hello. I hope you're doing good. Thanks so much for joining us. We have no question there. Let's see on Facebook. So no comments here either. 2 likes though, appreciate that. If you do like the content, don't forget to leave comments. It's really useful. It tells people the algo, and it tells us as well that you're liking it and you want more of it. Of course, that way we can produce more content. Very straightforward. If nobody watches it, then we won't do it. Simple as that. Okay, thanks so much for watching, and I'll see you on same time next week. Goodbye and happy trading.